All right, I want to welcome everyone officially to today's meeting of the United Policyholders Wildfire Risk Reduction and Asset Protection Working Group. If there's anyone on here who's new, I will just remind you that this is a working group that has been meeting for quite a while, probably over 2 years now. And before that, there was a sort of a related effort attached to the governor's tree mortality task force. So there's a lot of people on the call today who have been toiling away in the trenches in communities throughout California on promoting, facilitating, increasing wildfire risk reduction, mitigation, home hardening, defensible space, and also helping themselves and their neighbors and their colleagues contend with a growing crisis in the availability and affordability of property insurance. So it's just amazing to see this turnout, but we do have two very special guest speakers today that I felt pretty fortunate to be able to line up. And before we get into Ken Allen and Carl's presentations, I will give my usual kind of update on things. So we know that at least one wildfire risk reduction mitigation discount rate filing has been approved by the Department of Insurance. And we've got Ken here to explain a little bit more about that process and where things are. And then we've got Carl Sussman to give us a little bit of the details about how you actually can qualify for the approved FAIR Plan mitigation discounts. But before we get into that, a recap on where things have been. Those of you who may have been reading the paper or listening to the news know that there was a lot of talk about some sort of legislative negotiations and some sort of change in either the FAIR Plan formula or Proposition 103, or whether insurers will now be allowed to use CAP models, as we've talked about in previous meetings, or whether they will be allowed to pass along their reinsurance costs. All those things have been swirling around in the news. But as far as we know, there was no kind of deal cut in the legislature, and but efforts are continuing from those of us who are in the trenches promoting mitigation, or those of us who are regulators or public officials. We are all doing our best to try to bring some solutions here to the home and business owners of the state. And we certainly know there's a lot of high emotions, more than ever out there. I think people are getting more and more panicked about what kind of premiums they're getting hit with, and confused. And that's leading to rumors and all kinds of fear. So my goal here today is to convene us with a focus on facts and what we know. And some of the people that are with us today are really very important leaders. We've got Supervisor Rosemary Smolcomb with us today, who has been toiling away for her constituents down in Mariposa County now for many, many years. We have Bill Tyler from Nevada Fire, who we honored at our fundraiser a couple weeks ago for all the groundbreaking work that he's doing. We have all kinds of heroes here. The Berklumpuses, who were very early with getting screens for people to put over their vents to prevent embers from flying. So they've been on the front lines. And then we have a lot of other folks here from academia, Cal Poly, and from all parts of the state. So with no more further ado, what we're going to do is we will hear from Ken Allen. Ken has been a professional at the in rate regulation at the Department of Insurance for many years. He's been he is the lucky guy in charge of the team that reviews insurance company rate filings. And so he's been kind of really not only has his team been having to navigate, they had to navigate COVID, and they had to navigate some personnel shifts with during COVID, where a lot of people took early retirement, and having to navigate this crisis under a lot of pressure. When things are the way they are now, I think people look to blame, and they look for a scapegoat. And it's always interesting to me how when I talk to insurance agents have been very helpful to UP, the insurance agents and brokers that have been our eyes and ears. Carl Sussman is one of them, helping us keep our ear to the ground as the market situation evolves / deteriorates. I'm very grateful to Ken and his colleagues at the department for having an open door, for being willing to come here and talk with us. And I have the same feeling for the agents and brokers that have been sources of information for UP. When people say, oh, if only the commissioner would blah, blah, blah. I only wish that were true, that there was some sort of one thing that Commissioner Lotta could do. But when you have a situation this complicated, where you've got science, you've got economics, you've got inflation, you've got technology, drone imagery, predictive analytics, you've got a whole kind of a toxic stew of factors that have kind of shaken the home and business insurance markets up in a way that no one's ever seen before. There's no one person to blame, and all we can do is in my mind, find constructive approaches, and to the team at United Policyholders, constructive solutions have primarily been in helping consumers shop, which of course we are doing on an ongoing basis, but also doing everything we can to help reduce the risk that has increased, that is causing insurers to react the way they are. And that is why we're all here, as the wildfire risk reduction and asset protection working group, because we all know that not only is it not safe for households financially to go without insurance, but it's not healthy for our economy, for people to have uninsured mortgaged assets. And I think, we're all focused, I hope, in a constructive direction. So 2 more things, and then we're going to get to Ken. There's been a lot of talk about these CAT models, that if anyone doesn't understand what they are, you can go on our website and learn. You can read the testimony that UP gave at the department's recent first of 2 workshops that they are holding on CAT models. But if you don't understand what those are or why it's such a big deal, I would suggest you put that in the search box at our website. There's a lot of talk right now about what if we could develop a public model, meaning something that was created. This is all about, insurers saying the past is not as good a predictor of the future as it used to be. Therefore, they want to be able to use more forward-looking tools to predict in this era of increased risk, what kind of rates they need to charge to meet that increased risk. So there's a lot of talk about 2 things. One is, could we have a public model that you could hold commercial models up against as a yardstick to see if they're exaggerating the risk or if they're appropriate? The other thing that I think is very, very interesting that's just starting to be discussed is the idea that because the availability and affordability crisis is largely being driven by what's called a hard reinsurance market, meaning the reinsurance that insurers buy for their high dollar exposure has gotten very expensive and limited, because that is a big driver. And we're hearing a lot about reinsurers really being the ones pulling the strings behind the scenes, that they're actually saying to their insurer clients, we don't want to see homes in your book of business that have a score of over a certain amount, because reinsurers are a big player here. Seems like it might be a good idea for Congress to create a public reinsurance facility similar to what we did after 9/11, when the insurer said, we're out of terrorism risk, we're not going to insure it anymore. So we created this federal Terrorism Risk Insurance Association. It hasn't actually had to pay any claims, thank God. But we know that Congress was able to kind of pull it together, as dysfunctional as they may be in our era. So those are the two things. So I'm very interested in where we're going to go with this. But that said, here we are in the present, in the here and now. And I'm just so pleased to introduce Ken Allen, who's the head deputy commissioner in charge of the rate regulation branch at the California Department of Insurance, who is doing the glorious work of reviewing the filings that insurance companies have made pursuant to the regulations that the department put out, pursuant to all the work that we have been doing here in this working group with our friends at IBHS and the Safer from Wildfires Coalition, to say, okay, we all agree now on what constitutes effective wildfire risk reduction. Now, can we get insurers to reward people with incentivizing them to do those things, spend that time and money by giving them a break on their insurance? Very key to what our working group has been doing. So Ken, how are we doing with our goal of creating more incentives for people to harden their homes and create defensible space? Thank you.
Well, thanks, Amy, for the introduction. I don't know that I've ever heard of rate filing work as being glorious, but go ahead and take it. I guess there is some glory in there. But what I thought I'd do is kind of give you a high level information on where we are today, what we've received, what we're doing with what we received. So I might take 5 to 10 minutes to go over this information. And again, insurers were supposed to submit filings to us back by April 12th of this year. And the intent was for those filings to be relatively simple rule filings, where it's primarily just for the introduction of mitigation discounts for the 12 mandatory factors, if an insurer does in fact rate or have a premium charge that does contemplate wildfire risk. So where we are today, at this moment, we have a little over 225 filings from commercial insurers, and that's 111 different commercial insurers. For personal lines, we have just under 120 filings from 73 different insurers. So we do have a lot of filings, both on the personal side and on the commercial side. One thing we are looking at or still working on is trying to make sure, did we receive a filing from an insurer that was supposed to submit a filing? And I think, even over the past few weeks and months, we still got to trickle in each week of some additional filings. So staff is trying to identify which insurers have not submitted a filing where they were supposed to for a certain line or product. It's a little bit easier on the personal line side because homeowners and even dwelling fire, we can pretty readily identify a program and then see if the insurer needed to submit a filing pursuant to the regulations. It is a little bit trickier on the commercial side, just because commercial is a lot more varied in terms of the programs and products, whether it's property or whether it's a CMP or a business owners or something that's buried within a commercial program somewhere rates for wildfire. So that's a little bit more challenging for our staff to try and figure out on the commercial side, have we received everything we should have received? So in terms of what we have received, staff has started the review and is reviewing these filings. And these are in addition to what Fair Plan filed, and Carl will get into that. But we also have filings from advisory organizations. So whether it's Insurance Services Office or ISO or American Association of Insurance Services, AAIS, they have also submitted filings that are responsive to the regulations. And we know a number of companies, more so on the commercial side, are going to adopt what we end up approving for these advisory organizations. So we are specifically looking at those very intently as well, because once those filings get approved, that will open the door for a lot of insurers filing to adopt the advisory organization mitigation discounts to get those filings approved as well. So we want to make sure that our review is pretty thorough and consistent, and we're trying to get it as right as possible before we approve the bulk of these filings. But what we have seen from some insurance companies, and again, I don't want to broad brush this and say that's every insurance company, but in some instances, companies did submit a filing responsive to the regulations that was not a simple rule filing, that was quite complex in a few different aspects. We do have some insurers that tried to or are trying to revamp the rating process under this simple regulatory rule filing to just introduce discounts. Some insurers are adding models or the use of models, and embedded in the model or some algorithm is the discount or application of the discount. And we are trying to unwind that and understand that in terms of, okay, is this actually responsive to the regulations? Is this compliant with what regulations require? And then we want to know in terms of premium, how much does this equate to premium dollars? And some staff have been asking for examples, rating examples, or premium determination examples, so we can understand what some of these more complex filings that have been submitted actually mean in terms of a premium discount. And I understand that some companies are pushing back against us and our staff because they believe that, you know, with no data to support a discount or no information, and again, the regulations didn't specify any kind of discount percent or dollar wise. You know, it is open to the insurer to demonstrate to us that the discount that is filed is appropriate. But we are seeing some very small percentages or what are turning out to be very small discounts that are offered for some pretty significant mitigation actions. So we are continuing to question those at this time because as you mentioned in the introduction, a big part of this is the incentive to try and incentivize the property owner, whether it's a homeowner or a business, to do the right thing and to mitigate. And if they have limited funding to spend on mitigation, if they can understand what it might result in terms of a premium discount, they might be able to choose which mitigation action they want to take currently versus maybe something else in the future. But a big piece of this was the incentive and try to do the right thing. And at least right now, you know, in staff and looking at these, some of these, in our opinion, aren't really there in terms of providing the appropriate incentive. So we continue to work on those. Our goal is to try to get these out by the end of the year, and the end of the year is quickly approaching. So we've got work to do on this. But that is part of the process in the filings that we have. So up front, where we thought it might be more simple to just submit a discount for this mitigation action, and you have your 12 mandatory actions and you have a discount applied to it, while some insurers did take that approach, other insurers did not. So we have a wide variety of the types of filings or the types of rule filings, what's contained in them, that insurers use to approach in providing a mitigation discount. So that is kind of a summary in terms of what we have, the numbers, the variety of filings that we've gotten, and the actions that we're taking to try and make sure that as we get to the point where we will approve these filings, much as we've done with the FAIR plan, and maybe that's my lead in for Carl, that we want to try to get it as meaningful as possible. I mean, it's probably going to be a few step process where maybe the initial discounts aren't as significant as we'd like. But as statistics bear out in the future, whether or not a file discount should be higher or perhaps should be lower, the insurance companies gathering the data and tracking the information, and then in the future, the ability to put a finer point on the level or amount of discount, I think we're kind of at a first step, and we will see future steps taken to refine the discounts that are filed. So I will stop there and see if there are any questions, or if you want to move right over to Carl and the FAIR plan.
Well, thank you very much, Ken. I'm going to take moderator prerogative and ask a couple of questions. And then I will say, if folks do have questions, we can go. I want to make sure we have enough time for Carl. We can go until the half hour, and then which is we have a few minutes more here. Yeah, we got about 10 minutes, so we make sure we give Carl enough time. So if you have a question, you can put it in the chat. That's sort of the easiest thing for me. So Ken, before we collectively undertook this work, UP would give in our community education PowerPoints, we have a slide that says that takes them to the CDI landing page, and there's a tab that says companies offering discounts, and there's quite a few of them. My question to you is, and I know that insurers had said to us way back, don't hang on, sorry. Sorry about that. Oh, technology. Don't artificially mandate 15%. It won't be justified, although, and then I've talked to other states where they wish they had done that. But can an insurer, without filing, without having gotten approval, could they elect to give a discount without it being in their filed rate?
Well, no, because we are prior approval. So anything that impacts premium would have to be first filed and approved. And as you noted, even prior to all of the regulation effort, there were a number of insurers, including Fair Plan, that did have some type of mitigation, wildfire mitigation credit or discount already filed, both on the community level and the property level. So companies did have some discounts available before. And some of those discounts were based on really not much information, just, hey, we want to offer a discount, we want to do the right thing. And so there were maybe some 5% or 10% discounts based on what it was. And again, the percent gets a little tricky because you have to understand how the insurer rates their product, whether it's a base rate and is a discount applying to a base rate, or is it by peril rating, and maybe the discount might be larger, but it's only applying to a wildfire portion or fire portion of the premium. So there has to be some understanding behind the numbers and information, and it gets to a lot of detail to explain it. But otherwise, those companies, they did have to first submit and receive approval of those discounts before they could offer them.
Okay, and we do have a couple good questions here. One more thing, I believe that Consumer Watchdog has intervened in at least one or two of these. Have they intervened in a number of the discount filings?
I believe we're up to 2 at this point from some of the larger insurers, and one of them is a little bit complex because that company did try to input some additional changes above and beyond what we thought was appropriate for a rule filing to introduce discounts. So that is a current ongoing discussion with that insurer. And then a second one, I think we just received recently in terms of the intervener process. And I don't have as much information on that second one. I haven't had the opportunity to look in detail at that one.
Okay, thank you. So Chief Tyler asks, what level of evidence do you anticipate a homeowner will need to provide in order to potentially receive the discounts? Can you speak to that?
That is really going to be up to the insurer, and the insurers are probably going to have a few different techniques. I mean, they could go on site and do an inspection, but of course that's expensive, and insurers don't want to have that cost, especially if a lot of these properties are far out away from civilization and someone needs to travel and spend time. But they could do that. Insurers could also rely on, there's public data available. And I know there's vendors out there who are willing to go out and maybe take pictures or have drones fly over or do some kind of photography remotely that could validate or support a discount. And then some insurers may just have a questionnaire and say, hey, based on this questionnaire, and here's what we have, you homeowner or agent, you complete this, submit it to us, and on faith, we'll take this as accurate. Then at some point later on, maybe they will check that, or maybe they will do some kind of validation of that. Okay. Or the insurer on faith otherwise could just, take into account and assume its policyholders have something in place or whatever means. So it's going to be across the board in terms of each insurer, how they look at this and how they take their own action to determine whether or not the policyholder has indeed completed each of the mandatory mitigation actions.
Okay, and this may be not in your bailiwick at DOI, but I mean, has there been conversations about creating a standardized checklist? Like, California has the legislatively mandated disclosure form about the different types of, coverages. Has there been a conversation about that you're aware of?
If there has, I haven't been in that conversation. That could be something down the road, but at least right now, I'm not aware of any type of standardization in terms of a checklist that
Gotcha.
could be, I mean, it could make sense.
Yeah.
Because it is mandated by regulation and it is the 12 mandatory plus optionals.
Right.
But at least right now, no, I'm not aware of that.
Okay. I mean, I just always think about a little bit the analogy of a LEED certified building, right? That there's we just have to get to sort of this standardizing. A Supervisor Smallcombe asked, Ken, is your goal to ensure that any discount is truly a reduction in the premium that would otherwise have been assigned to that property?
I would say that's a goal. Yes, absolutely. Because again, we at the department, we certainly want any mitigation action to be recognized. Now, it may not be a significant reduction, but I think we're seeing in some instances it currently as proposed is insignificant. And that's what we're trying to press insurers on is, maybe there is this middle ground somewhere, at least as a first step, where we're not pushing for significant premium reduction, but we don't want insignificant either. Can we find that middle ground? And that's part of what we're working on with the advisor organizations, as well as insurers, to try and find that at least initial medium point where it's not perfect and maybe it'll never be perfect, but it's a step in the direction. And then going forward, again, with data and with information that supports, that these mitigation actions do in fact reduce losses, that can in the future increase those discounts.
Yeah. Lori Hutchinson of the Lake County Fire Safe Council says, is there any chance of Firewise community designations getting discounts based on following those requirements?
So if I understand the question correctly, I mean, there are two mandatory community mitigation discounts, and Firewise designation is one of those. So unless I'm missing something,
I think that's what she was getting at. I think that's what Lori, the answer is that being a Firewise community is one of the criteria. We tried to make it very inclusive. I think a list of Firewise, fire safe, COPE, it could be, I think the language is nice and broad.
Yeah, and I'm not sure for the people joining this call how steeped they are in the regulations and the 12 mandatory discounts. Some may be, some may not be, but yes, Firewise community is one of the two mandatory community mitigation discounts.
Yeah, and Jason McBroom asks, he's addressing in the Safer from Wildfires manifesto, I don't know what you call it, caulking and plugging gaps greater than an eighth of an inch around exposed rasters. Does this meet the intent of the enclosed eaves requirement? This might be a little in the weeds for you.
Well, that's a good question, and I can't say I know the answer to that in terms of, what is the definition of enclosed eaves and what does it entail in terms of caulking? That is probably something that I cannot accurately answer today.
Yeah. Okay.
But it's a good question.
It is a good question. Tammy Schwartz, who is herself a modeler, is asking, are you suggesting that the current, she notes that you said the filings are expected to be simple with only the introduction of mitigation discounts, but the regulation made all carriers who are using a model file a new model or provide proof the current model was compliant. Are you suggesting that the current models in use did not need to be refiled or revised in response to the reg?
Well, I think the issue for us on this is where the companies have decided to either use an existing model or submit a new model that they hadn't used before and have the wildfire discounts reflective in there. That's a little bit more challenging for staff to try and figure out, okay, does this model, especially for one we hadn't seen or reviewed before, does this model accurately take into account the 12 mandatory mitigation efforts? And then can the modeler or insurer then identify for the policyholder, can you flip the switch on and off for each of the 12, and will that relate to an amount of premium? And can you demonstrate that to us in the filing, give us examples, give us information? So we haven't really, stated one way or the other that a model does or doesn't, because again, we don't approve the models. We will look at them and we'll approve the rates. But in these filings that some companies have made a little bit more complex in terms of putting the mitigation discounts as part of a model, that is taking us more time to kind of dig into it just to make sure that the approach is appropriate, and it could be. Or if there is some kind of shortcoming in the approach that the insurer has using a model, we'll have to work on that with the insurer and the modeler. But again, we haven't reached that point yet to say yes or no on any of these, because it is a labor of love to look at these filings and figure out what's going on and if the approach is appropriate and does meet the regulations.
I'm going to ask you a question that might put you on the spot, and I apologize because you were so kind as to come here and speak to us. Do you need more resources? Would it be appropriate for this group to go to their state senators and assembly members and support increased funding for staffing positions in your unit?
We are currently working on that and have been working on that for some time. It's not an overnight process. And I will say we've actually hired 8 new analysts within the last, well, 1 a month ago, 6 last week, and 1 next week. So we've got 8 new people coming in, but we are seeking more positions, more funding, and there is work in progress to accomplish that. I don't know what the final number will be in terms of, when we get positions, we got to figure out. We had actuaries, we had analysts, we had both. How many of each? What do we need? Because a big part of it is trying to get that file review time down, because that's been up for a while, and it grew during COVID for a number of different reasons. And so we are trying to address that in addition to all these other things. But yes, that is something that has already been undertaken by a few different external entities as well as our internal staff to work on this and get more resources to allow us to review the rate filings more quickly, whether they have models or not, or whether that's staff internally or perhaps additional external resources that we currently use to review filings that have catastrophe models.
Okay, thank you. We are at the half hour. So what I'm going to do, we got some other really great questions here, including one about how the department's going to be educating consumers about the discounts. And I know from working with your outreach team, we've done quite a few presentations together, but that you will be continuing to do that. And is Ken, for all the folks who are on the call that might want to have somebody from the DOI speak to their community, is Julia Juarez the right person? Okay, great.
Yep, I would contact Julia for that.
Okay, thank you. All right, so what I'd like to do is thank you all for those great questions, and we may have time to get to some more, but I wanted to give Ken a break here. Thank you, Ken, and move over to Carl Sussman, who has been a great friend to United Policyholders and to through this crisis, this developing situation. Not only has he been helping us keep our ear to the ground in terms of what not known brand, non-admitted insurers might be an option. We have another gentleman who's been our kind of eyes and ears about the FAIR plan and what they're offering. But Carl has been a phenomenal source of information for United Policyholders now for quite a few years. Thank you, Julia, for popping in on the chat and giving us your contact information. So Carl is one of these agents that has had his heart broken many, many times over the last few years, because he, of course, takes great pride in being a professional insurance broker who knows the market and can put his clients with the best option for their needs, and not just throw them to, you know, whatever insurer is going to pay him the best commission. He takes it very seriously, his the quality of his professional services. And so Carl has been very interested in United Policyholders work streams, but also in solutions. So Carl offered to come and speak today on something very concrete, which is that the California Fair Plan has gotten some mitigation discounts approved. So Carl's going to talk to us about what they are and how you can qualify for them. And then let's see what kind of time we have left for more of a discussion, because I think I'm sure folks here are very, very interested in a producer's perspective. A producer is a term of art for agent or broker that either sells the products of one insurance company or sells the products of multiple. Carl is one who sells the products of multiple, so he's known as a broker. He's based in Los Angeles. And is a super big brain. So thank you so much, Carl, for sharing your expertise.
Thank you, Amy. You said I had my heart broken so many times. I was like, oh gosh, this could be leading anywhere. So I'm glad that it was something benign. Ken, thanks again for all that information. I know that you guys don't get a lot of love, you know, with everything you're doing. So, but you know, it is appreciated, and everybody knows that we need you there. So, you know, again, kudos to you. And it is like, for you to call it a labor of love, it has to be. You have to really believe in what you're doing to do it. I'll tell you for sure. What I've done is I've got a quick presentation. It's a handful of slides where I can go over specifically what the discounts are that were approved and are in place right now to get discounts on California Fair Plan policies. They're approved, they're active, they are live and ready to go. So let me share my screen so I can get those slides up. I'll buzz through them real quick. Let's see if we can do this correctly.
Now, while he's doing that, I will explain my heartbreak, meaning that a lot of, you know, pretty much on a weekly basis, UP has been getting texts from our agent broker friends around the state saying, oh, now this option is no longer available to my clients. And that was what I was talking about with the heartbreak.
Oh, you're not wrong. There's no question. Yeah, I mean, every day seems to bring more frustrating news, and you know, we're all I can't get away from the puns. We're weathering the storm as best we can. Just to confirm, you should have just a gorgeous picture of fire on the screen. Is that showing up okay? And then I'll jump in.
No, it's black.
Let's see. Let me go back to share then and see if I can try that again. Let me go back and try and do a screen share again. You would think by now, it's what year, we would all have Zoom down pat, like we would know it like the back of our hands, and somehow it still will do this to us now and then. Let me try one more thing. There we are. So let me reshare. All right, I think I've got it figured out now. So let me share that screen with you. And how about now?
I'm sorry. I'm going to break your heart again.
Wow, we tested this and it worked just fine.
There you go. There you go. There you go.
Oh, you got it. Okay.
Yeah,
All right.
yeah,
It's just so beautiful. You know, we had to start with that. So anyway, I'm gonna burn through this, like I said, just a handful of slides. Since you don't know me, I thought I would take just 2 seconds to let you know, Amy gave me a great introduction, and I put together a quick slideshow, but I wanted you to get an idea. I am an independent broker, but it's sort of insurance, like Ken has it as a passion. I sort of have it in the DNA. I had no choice but to be getting into this industry. This is where I've come from. I had a father who was an insurance sales executive. He married someone that was also an insurance sales executive. So, of course I became an insurance agent, but I married an insurance agent who's my spouse. My sister ended up being a claims adjuster, and then her husband was a fraud investigator for an insurance company. We just recently brought their son on board. Of course, my uncle was also an insurance agent, and his wife was an agent as well. Their kids are, insurance agents, and one of them was in IT. So my kids, my son and daughter, have zero interest. So apparently insurance stops with us at this point. So I guess you can imagine I was built for this particular industry. So that's how I got to where I am 30 years ago. So let's talk about the wildfire hardening discounts that are actually in place right now for the California Fair Plan. They were effective on August the 23rd, and they are available for existing policies as well as for policies that are being written from scratch. And we'll go over how to qualify for them. And I got to tell you, listening to Ken talk about the different variations in how to qualify and what those discounts are, I think this is pretty amazing what they've come up with as far as what qualifies and what you have to do. So there's basically two discounts that they have available. One discount is for protecting the actual structure, right? It's like, what do you do to the house? And the other discount I'll get to is for protecting what's around the house, okay? And the discount for protecting the house and doing certain things is 10%, and the discount for protecting the surrounding area is 5%. I noticed we had a comment that came in about sometimes it's not fair because there are things that are off your property, and what are you supposed to do about that? Fair Plan has taken the view that, well, okay, if you can do what you can do, there's a 5% discount, but if not, the real bulk of it's 10%. That's a lot between the two of them. It actually turns out to not be 15%, 10 and 5 actually turn into 14.5 because that 0.5% comes off because it's a discount off of a discount. I'm just reporting on it. I can't tell you that how it makes sense. It's the big brains, it's the math. What can I tell you? So if you're able to do both of these sections, right, you can do the hardening on the house and the hardening around. You're looking at 14.5% off the premium, the fire portion of the premium, which is huge. I mean, I think it's huge. I don't know what Ken is seeing, and he was being very good about not letting us know what some of the insurance companies were asking for. But when I first saw this, I thought, wow, that's pretty significant, especially since we don't actually have any statistics out yet to know if any of these things actually do a lot. So I think Fair Plan was pretty aggressive in what they came in with. You do have to do all of them to qualify, right? You can't do some and not all. So it's an all or nothing deal. You can't do half of them and then get the discount, which is significant. Now, as far as what do we do? How do we qualify for these discounts? Like I said, you have to do everything, not just some of the things. So as far as what you do to the structure, the first thing is the dwelling has to be a Class A fire rated roof, which is comp shingle, stone, concrete, clay, tile, metal, that sort of thing. That's within our control, right? It's our house. The next thing that must be done is there has to be 6 inches at the bottom of all exterior walls made of non-combustible material. The next thing that has to be done is that vents need to be fire resistant and covered with mesh, right? We've been hearing about that forever. That's definitely one that has to be done. The next thing is that all windows must be double paned. And finally, for that 10% discount, you do have to be sure that the eaves are closed. Now, of all of these things, if you do the math, it could certainly add up, right? If you're looking to replace the roof and you have to start building a perimeter around the bottom of your house, that's gonna be some serious dollars. But the rest of them, I think, are relatively inexpensive to do. And again, if you're looking at a high premium Fair Plan, that's 10%. That's a big deal. And that's definitely something that you're going to see and you're going to feel. Now, for the surrounding discount, right? This is that 5% discount. The first thing you have to do is remove all vegetation and debris from under the decks, if there are any, and generally around the house. There has to be an ember resistant zone maintained within 5 feet of the house. Ember resistant seemed a little bit nebulous to me. I couldn't get more specifics than that. I would suspect that in general, they're talking about weeds and plants and things that are combustible. They want to be sure that there is a solid zone of 5 feet around the house that an ember is not going to hit and then immediately jump over to the house. They're talking about defensible space maintained by trimming trees, clearing brush, removing debris from the yard. These are all things that we've been told to do forever. This is something that's part of that surrounding discount. And they quoted a California Public Resources Code 4291, which I almost included. Then I thought, nobody's going to read all of that. Suffice it to say, you know what needs to get done. You need to clear the stuff. You have to make sure the trees are not hanging over the roof. You need to be sure that there's not debris and a mess all over the place. Finally, there has to be no combustible sheds or outbuildings within 30 feet of the dwelling. I can actually see this as being a bit of a problem for some people. They might have detached structures within 30 feet. I don't know necessarily what will happen as we go forward, if this is something that might be, unless it's a dwelling that's occupied, right? Unless it's an additional structure of residence, right? Or a rental structure for one unit, something like that. Right now, it just reads no outbuildings. Outbuildings, I think, is going to be something that they're going to, figure out a little bit more specifically as they go on. And again, this is a 5% discount. So if you can't do one, you can do the other. I would suspect most of the homes probably could almost qualify for this right away, because if you're in a high fire zone, the likelihood is you have already done this before, or you're certainly aware of it. And if you can actually get rewarded by lowering your premium at 5%, then my guess is you're going to do it. Now, here is something we talked about. How do they verify it? This is a big one. Fair Plan is going to 100% of the time come out and inspect the property. 100% of the time. This was made crystal clear. Now, you can apply for the discount Monday, and there's a form. You sign the form, your broker signs the form, or if you're directly through the California Fair Plan, you both sign the form, you submit it, and they will apply the appropriate discount that day, effective that day. Now, an inspector might come out 30 days later, 60 days later, who knows? However, if they come out and it is not 100%, again, they're very specific. If they find that there are any of those items that aren't done, they will retroactively go back, remove the discount, and charge you that premium. So it's not, there's no trust, there's no faith. And as frustrating as it is to think that you have to have another inspector come and look at the house, I have to tell you, I would be more concerned with an insurance company that says, oh, we'll trust you and just sign here. Because I also do insurance expert witness work in complex litigation cases. And what I see in this is you're going to sign something which becomes a warranty on your policy, which basically means if you're wrong about this, they can deny your claim. Now, I'm not saying the insurance industry would look at that as being, maybe we'll just make it easy to qualify for this discount, because if there's a loss and we find one of these things in violation of the discount, we can walk away from the claim, but it's not impossible. So I would be aware that if, as these do start rolling out, I would be happier having somebody come out and inspect. Personally, I would insist on it versus just signing a form and saying, yeah, I did it. Photos, okay, maybe, but I would try and stay away from anything where you're going to literally just sign a form and everyone decides, yes, that's good enough. So that's the gist of the Fair Plan hardening discounts. Again, I think that they're pretty darn generous, considering that, like I said, there's really no statistics. The actuaries have not had time to go over what these items specifically will do over the long term. So I think if in general, we start to see discounts coming in anywhere near 15% for this type of work, I personally think that that's a tremendous win for consumers. I
completely agree. And it's just so funny because like when I first had this conversation with Rex Frazier, who's a big lobbyist for the insurance industry, I'm sure he was the point man in the negotiations in the last few weeks. He said, Amy, don't come in and say, this 15%. because it's not going to be justified. And here we are, kind of, that's where it needs to be, of course, to really incentivize people. Fawn Necton, I'm assuming is a producer as well, is asking, Carl, I've successfully added both discounts to a newly issued CFP policy. However, the reduction in premium was less than 10%, but not 5%. Any insight into what portion of the premium CFP is discounting? And it seems not to be just the fire portion of coverage before extended coverage and VMM, which I don't know what that refers to.
Vandalism and malicious mischief. It's one of my
Okay.
favorite phrases, because I want to know what other kind of mischief is not malicious. But anyway, my understanding is that it's off of everything except for the vandalism and malicious mischief portion. So it's the fire and the extended coverages that the discounts are coming off of. It's a very, very good point, because as you can imagine, consumers and clients are funny that way. If you tell them 10% off their premium, that's a pretty easy decimal point to move twice. And if they're not seeing that, they're going to say, hey. So it's probably a good idea to be a little clearer and say it is 10% off of a specific portion of your premium. And if they want to know specifically, I would double check with Fair Plan, but it's my recollection that when I went through and was reading it, it was off of the section that was the fire and the ECC, the extended coverages.
Okay, I want to turn to Ken, if you wouldn't mind unmuting. Joel Loucher has a related question. It appears that the discount is only off the wildfire portion of the rate, not the full fire rate. So is that accurate?
So Fair Plan does have a separate wildfire premium component, and I don't have it up in front of me, but I believe that the discounts that Carl was speaking to, it is specific to the wildfire portion of the premium. That's my recollection of the filing and what was approved. And I saw a couple other comments from Joel, if I could kind of add to that.
Yeah.
So Fair Plan, again, there is question, are they subject to Prop 103 in the regulation? And no, necessarily, the department does not believe Fair Plan is subject to the regulation. So did they have to comply with it, or I guess I first attempt to comply with it? No, they did not, but we have a lot of discussions with Fair Plan, and they recognize the need to have discounts. So what they did is they submitted the discounts as Carl outlined. You have to do all 5 for the home and all 5 for the surrounding. But this is just an interim step for Fair Plan, because they are switching over their policy platform, and basically on the fact that they could not program into their old antiquated system the ability to have individual discounts. They have told us that they are going to move to that, where they are going to mirror the regulations in terms of offering discounts on an individual basis. They will get there, but they cannot do that yet until they switch over their internal platform that will allow them to program in individual discounts. So I don't know the validity of that. That's what we were told, is that this old system, you could just plug in one thing and that's the best they could do. And they were getting rid of this platform. And so they didn't necessarily want to spend the money to upgrade an old platform just to then switch over to something new.
They actually did. Today is the launch day. It's their new system is called Duck Creek Policy System. I won't even tell you what's already happened with it today, but at least we know that it actually did get switched over today. Also, before I forget, I pulled a copy of the regulation that the DOI signed as far as when insurers had to, I just put it in the chat, when insurers had to submit their whatever their discounting desires were. And I found it surprising, especially when you confirmed it, that there wasn't a number given that they had to try and comply with, because not being jaded, I could see an insurance company saying, do all of this stuff and we'll give you a % off. Right? I could totally see that, right? And then we're all spinning our wheels and nobody's going to do it. And it's kind of a big, kind of waste of everybody's time. So I'm hoping, I mean, I know you probably can't get into it, but in general, are we seeing relatively reasonable discounts from some of the carriers? Are you comfortable telling us?
We're seeing a mix, I think, in terms of what we think might be reasonable, but I think we're seeing more of what we think are too small, in our opinion, and not providing an incentive. And that's part of the reason that these filings are still not approved. And industry, again, does not like us questioning their minimal discounts where there are minimal discounts. So it is kind of a struggle that we have right now. And I know people are wanting, hey, maybe you should approve something. So at least there's something out there available versus, we could do that. But then I see some of the, the chat saying, hey, even if it's a certain percent on a much higher premium, that doesn't really help. So, where do we find that balance, as I said earlier, to try and find, it doesn't have to be significant, but we don't want it to be insignificant. So where is that middle ground? And last thing I was going to add with Fair Plan really quickly in terms of the all or nothing approach, we felt at the department that there was some value in at least getting that out, because if we had to wait on Fair Plan for them to do their system and then it was going to take months. So we wanted to get something out now in the interim. So at least it's available. And then later, however many months it is, Fair Plan will switch to follow the regulations.
I think you can also use it as precedent to show some of the carriers that, look, hey, this is a pretty hefty discount. And hopefully once the market starts to move again, they'll be more apt to talk about discounts when there's, underlying premium that's, everyone's in agreement on.
Right. I mean, that is something that United Policyholders has been, saying in the media a lot, is like, we want to get to a place where insurers are competing marketing wise for, we have the better discount. We have the better, mitigation discount. So as far as the second part of Joel's question about why doesn't CFP have to comply with, requiring a discount for each action, your answer was that we just decided it's better to start somewhere, right? And so and that works. That certainly works for me.
And the regulation is, it's a Prop 103 regulation, and Fair Plan, is not a subject to Prop 103 specifically. But again, they wanted to do their best to try and work, and it will take some time to get there, but we got something in the interim.
Well, it's great because, I mean, certainly for this group, the people that are on this call, I would say the majority of the residents in their communities are probably with the Fair Plan now. So this is a very significant step forward. And I don't think that we should, just because it's not perfect, I think we should sort of a little bit congratulate ourselves with some progress. We've congratulated ourselves when we got the Safer from Wildfires rubric and the IBHS, standard. And now, we are making some progress. Will these new Fair Plan discounts be available for HOAs, specifically multi-unit building HOAs? Carl?
It wasn't listed as, I'm sorry, Ken.
No, either of you, either of you.
I didn't see anything on HOAs for it, but that doesn't mean that it's not there under a different section, possibly.
So the discounts that are approved are on the personal dwelling fire side. It is not on the commercial side. So that's kind of a next step, is Fair Plan is also trying to work on the commercial piece. They had a lot of work to do and they have limited resources to do the work. So we figured we got the personal piece set in place. Now it's going to be, let's see what we can do with Fair Plan on getting commercial discounts.
Yeah. So we did get a question that Carl answered in the chat, but there's been a lot of talk about the Fair Plan increasing their limits to, I think, was it 20 million for commercial, and that's supposed to take effect. Is that November? Is that your understanding, Ken?
Yeah,
okay.
For commercial property, November 1st at the latest, but we are trying to press them to make them available earlier.
Yeah. One more question, and great exchanges of information in the chat about the caulk and plug issue and some other things. But Carl, do you know, and this has been sort of a bone from the beginning, is like, who are the inspectors that the Fair Plan is sending out? Where do they come from? We know that, the NHPA, that is the mother of the Firewise program, has, they created this designation of a wildfire mitigation specialist. I think Chief Tyler, I think you've got, I don't know if some people from your agency are certified, or there are people in your community that got that qualification. Carl, do you know, are these wildfire mitigation specialists? Is that who's coming out?
Well, first, just quickly to go back on the commercial expansion, for people to be aware that that increased limit is per location, not per structure. And I know that there was already some confusion on that, because when you're talking about HOAs, they tend to have multiple buildings. Well, this limit is for all of the buildings. So it's helpful, but it's a first step, right? To try and get what is definitely needed, because large HOAs in these areas are suffering in a really, really big way. They somehow feel like they're being left behind because the insurance industry is, I mean, you can imagine if they don't want to have a handful of houses on a block, what do you think they want to do with $100 million in, condominiums, in a canyon, right? So I think that this is one of those cases of, perfection shouldn't be the enemy of better than, right? Or whatever that expression
Right.
is.
That was one of our rallying cries. I think the first year that we started having these meetings is like, let's not let perfect be the enemy of the good. But
Yeah,
Carl,
yeah.
on the inspectors.
Yeah, I don't think there's any specific designation. And I will also say, I don't think I can remember a time when I've had a client say they've had a good experience with an inspector from any insurance company. I wish it wasn't the case. I saw somebody made a comment about there being some type of regulation about them not just showing up unannounced. I think that actually exists. However, I still hear about it all the time. So, I mean, that would definitely be something that I would love to see get a little more attention, because first of all, it's a little scary when you all of a sudden have someone wandering around your house, right? And if it puts you in a strange position, you can imagine you may not remember to show them everything. It just might not go well, right? So I think that, but I'm not aware of there being any designation, and I'm not even aware specifically of where Fair Plan, where they go to the well to get their inspectors, but I would suspect that they don't have a ton of them.
Right. Well, there is a community wildfire mitigation specialist designation, like I said, and it is through NHPA, and we've got somebody on the call, Jason McBroom, who's got that certification. So what we're gonna have to wrap up, but there's something I did want to hit on here, based on what Chief Tyler just posted in the chat about tax write-offs for mitigation. So one effort that UP has been involved in over the years has been supporting a federal tax exemption for mitigation grant monies, which is very practical. And we're in the new Congress, there's a new bill number, so we will share our support letters for those bills. There's also a state version. Did we get Chief Tyler? Did we get you can unmute and answer if you know. Did we get the state tax exempt law through? I thought we did. I
don't know the answer to that. I'm sorry.
Okay, that's all right.
But I'll just say there is tax incentives for like automatic fire suppression systems that you install in commercial buildings, and it's like it goes down. It was like there was an incentive to do it within 5 years. If you did it in 5 years, you got like 75% of it, and then it stepped down after a number of years. You could still get 50%. So it could be something like that to try and really push people this way. But I think that would help.
Yeah. Well, okay. And then the final point, of course, that you made up there in the chat is that, and we, of course, I'm preaching to the choir here, but that the real benefit of mitigation, I mean, yeah, it's great to save on your insurance, but it's also that your property has a less chance of being destroyed or damaged. So I know that is not a message that everybody absorbs readily, but it is an important one. So Ken and Carl, I am so grateful to both of you. It's a great conversation. I'm sure we're going to get some follow-up questions. So Carl, if you're willing to send us those slides, Emily can distribute them to
Absolutely.
Emily. Great, thank you. And then just a reminder to everybody that we have this open California home insurance survey on our website at uphelp.org. And Emily's going to post the link in the chat. We really want to get lots and lots of people taking the survey. It's not really, it's just a very organic way for us to know what's happening out there in the marketplace. We certainly, we have been supporting a federal data call, the Federal Insurance Office. We've been filing our letters and trying to, do everything we can to keep the pressure on FIO to do their national survey, see what's going on. The National Association of Insurance Commissioners has said they're going to do one too, because obviously, here in California, we're at an advanced stage of the situation. Florida actually is ahead of us in some ways, some different situation there, but very similar challenges in their market, in Louisiana's market, and in a growing number of markets around the country. So this is definitely a national crisis, not just limited to California, and we are well aware of how bad it is, especially for people in HOAs, condos, and basically all of the folks that probably most of you are in touch with. So we're all hard at work, and we appreciate everything that all of you are doing in your communities, as well as Ken, what your team is doing, and certainly Carl, you know, you and your colleagues who are not you know, going off and spending their afternoons in a dark tavern, you know, drinking away their troubles, or on the golf course. That you guys are, you men and women of the insurance agent and brokers community have their sleeves rolled up right along with us. So thank you everybody for your time. Thank you to Emily Rogan and Joel Loucher for their steadfast staff support for this working group. And Emily, do we schedule our next meeting? Do you want to unmute and share?
We don't have a date for it yet, but we will email out as soon as we have it, so you guys can save the date. Thank you.
All right. Thank you, everybody. And that's a wrap.